I can give you some stats on that from what we're seeing from Cifas, and obviously this is UK centric, but facility takeover is definitely rising. We are seeing that. We saw a 34% increase year on year.
We're dealing and focusing on financially vulnerable customers, and we had started with observing people that have got some type of cognitive impairment, but then that extended as well. But what we have seen now over the past few months, especially from the pandemic, there has been an increase of fraud from like couriers or Amazon deliveries, or volunteers trying to defraud people who have a lesser capability of judgment, whether that person is approaching them for good or bad means. But then those same people experience fraud, like through social engineering scams, and they're so much more vulnerable, especially through the pandemic, because they haven't got that support from their families or friends, and these type of events have increased.
What is vulnerable, and when is someone vulnerable? It is more transient than it ever was, especially with the COVID scenario of people losing their jobs, looking for money and stuff like that. The vulnerability changes day to day. And so I think we often think of the vulnerable as a very small percentage of society, but that changes and is transient more than it ever was right now.
Vulnerable because of furlough schemes, or freelancers, or people who are on zero contracts, or people that have supposedly had a steady income and then they just do not, or had higher expectations of their expenditure, and after the pandemic, and during the pandemic and the lockdown, these circumstances have changed and they can't meet these financial needs. And then obviously when you become you are in an unstable financial situation, then your mental health changes, and therefore you're more perceptive to also other types of vulnerabilities.
Fraudsters are trying to take advantage of people in a longer term span. So I know the FBI comes out with their crime stat report as well, of saying the fraudsters are waiting for a longer period of time to gain more financial information. Sharon, to your point, to make one big attack at one time and try to take as much as you can at once. And I think that's a change in behavior we've seen over time. But my advice to anyone who's looking in the space to try to protect themselves as a baseline is just don't be the lowest common denominator. I do think as most of these attacks are high volumes, if you will, or like very low level of sophistication. So do basic things. Like maybe a password manager is a great spot to start. Like try to just get your credentials into one spot. Try to protect like your bare use of just authentication sessions. Try to limit the number of services that you do reuse your passwords. If you try to do that, basic things like that will help. We try to stay away from, try to use email filters. I know that might be a little bit too far out, too advanced, but I'd say a password manager is what I just tried to tell people at the very minimum, so that you're above the very baseline. I think that'll set you above and beyond, at least in the US. I think only 18% of Americans, I think that might be high, use password managers. So I think trying to get above that is a good step.
I think what we're talking about here is primarily a lack of education, of the understanding of some of the basics around security and privacy, and that's especially true with the vulnerable. What we've seen in the UK across the board is a 50% increase in e-commerce transactions in Q2 alone. So we went from 20 to 30% e-commerce penetration in what is one of the most advanced e-commerce markets in the world.
Our space is around the mobile knowledge, and what we've seen, what we're trying to bring to market is a lot of the mobile operators, especially in Europe and North America, but everywhere, are now actually launching kind of tools to their CRM, APIs to their CRM infrastructure, which allows to check in pretty much real time the state of the SIM and the phone number, and verify in a kind of KYC type way. Usually it's a kind of match type product, whether or not the user of the number is the same as the onboarding user identity that's been entered. And so I think it's using mobile for things like that can be a positive check in terms of making sure it's not a fraudulent account. But it can, if there's anything suspicious about it, it can give you that warning. But on top of that, it can also reassure that the onboarding data is correct via KYC match type infrastructure. Now, using the mobile for that isn't necessarily perfect, because my son is sitting on my mobile account with my name on it. And so if he's sitting on the internet, then it's going to appear as me. So it's not necessarily completely perfect, but for a kind of low friction e-commerce parts of the world, I think there's a very simple, very fast check that can be done. And so the things we're looking at are the frauds that Mark was talking about: SIM swap fraud, call forwarding fraud, kind of hijacking type frauds, where particularly because of the prevalence of SMS two-factor authentication, there needs to be much more rigid checks on the validity of the number and the SIM, and so we're doing those kind of checks. But then I think the area again just seems much more useful to me in terms of mass market adoption. Even back to the social networking type players, I think using the mobile will be very simple, and the nice thing is it's very quick. So we do a ping to a network and back again in about a third of a second or something, and so that's probably in the time frame of a screen change on a sign up page. So I think there's a lot of use of mobile data which can really help at the low friction, not completely secure end of the dynamic.
The mobile is a unique device because it's a bionic device. It has eyes, it can see, it can hear, it can speak, you can touch it. And in a previous life, I tried to acquire a company that could identify smell using only the device. Unfortunately, they were really only focused on the military, but we thought that at Google it would be a great addition to Android, where then you had a full bionic device. But what I think is the right thing to do is what legislation says we should be doing, which is strong customer authentication. So that is something so that might be a password, something you have on your person. So that's like your phone number where you're doing two-step, and something that's unique to you and your identity, which the phone allows for, which is biometrics. So, your face or your fingerprint. And I think if you're using those three things, I think you're at least one step ahead of most of the fraudsters out there. The problem is that that's not being used widely enough. It should be used in all banking applications. And, the regulator has kicked the can down the road because the banks are not necessarily able to execute on this in the time that they were told to do that, which was by September 14th, 2019. So the reality is we have those tools. We have a really bionic device in our hands at all times, and that is the internet these days. It's not on desktop. The majority of traffic is going to the mobile device. So it's incumbent upon us to use it for what we can use it for.
One thing to be cognizant of is like not all phones and not all people have the same access to the resources to say enabling MFA. Like if we don't all have smartphones, we all have, and sometimes Wi-Fi connection and internet connection isn't the same as prevalent. I think maybe a way to even take that to the next step is saying to understand fraud of the two problem sets. There's the creation of identity, and then there's the ability to detect fraud on the other side of the other problem set. I think the trick to doing that is understanding what fraud is for your user base and what geography or locality that you're working in, and trying to tailor your solution in order to identify behaviors or use the resources applicable in that geolocation in order to make it applicable. I mean, in some cases, more remote places where financial inclusion is trying to bring people online, sometimes it's even having the attestation from someone within your group or your close family to say that you are who you are, that you work where you are supposed to be working. It should be sufficient. And I think trying to take that into consideration while also having the step up functions where we do have, say, the bionic device or the bionic enablement in order to employ that for more sophisticated regions, but being able to, what I say, manage globally, but identify locally I think is trying the key here, and trying to do that in a way that is scalable is ultimately where I think we're trying to get to.
Internet penetration on phones surpassed desktop back in 2010, 2011. And the cost of smartphones is so low these days that pretty much everyone has a device that has an enabled camera that has a bioauthentication on it these days. So I think that is changing rapidly. It has already changed. So I think availability is there.
The big one around fraud is collaborate, not compete on fraud. This is about sharing data where you can, if there's a facility to do that, share intelligence and share knowledge. So what's going on? What are the enablers that our fraudsters are using? Too often we see, and in the fintech space, but even in the big e-commerce world, is that they live in their silo too much. They don't share outside of that. They see it as a competitive advantage. If we're going to beat fraud, people have to share outside of their own little world.
The amount of account opening, per day has spiked, right? So if you just, whether it was in this product or any other sort of digital bank or robo-advisor we've seen this year, tremendous success in account opening. So it's just really hard to keep up the pace if you had any sort of like manual review or, to I think Simeon's point earlier, are you letting everybody in and then phasing them out over time? These strategies become sort of like paramount and put a lot of pressure on the organization. So if there was anything that was manual, you're now probably really having a queue and not able to hit your objectives.
If we think about why some of these problems are here, then it's really quite a profound educational and cultural exercise for the next generation to kind of deal with it. And I think to a degree we're reaping what we've sown in the internet for the last couple of generations, really, where if you look at account opening, which for me is a really obvious one, where a lot of really straightforward, low friction checks can really help an awful lot of organizations, not just fintech, just any kind of e-commerce business at all. And I think one of the problems with it is it's not ingrained in our internet DNA. Most of us, or people younger than me even, are used to social networking and email and just all these technologies which are ultimately either pseudonyms or AKA friendly. They're just profoundly non-secure in their absolute nature. And that anonymous Twitter, probably the best example, that anonymous ability to contribute or play a part on the internet is really quite ingrained. And so actually creating a sort of identity process that consumers expect within the internet feels to me like a really long-term challenge. And anyone in the fintech banking space is going to ultimately suffer for that, because they've got to do a lot of learning for the customers. So I think low friction account opening type opportunities, rather than obviously the very serious fraud questions need looking at as well, but actually just making the internet a more trusted place for lots of people via secure account opening, I think is where there could be a real kind of revolution in terms of quality of service on the internet. And I think things like open banking can really help drive that, because it becomes apparently necessary to everyone who's using it. Whereas if you're on Twitter, you don't really accept that everyone's who they say they are. You're just willing that there's a lot of nonsense and people pretending to be other people.
So yes, opening an account shouldn't be like opening a Twitter account, and we're not used to that. So the friction is, having designed a product, I know, at the forefront of it, right? We want the funnel to be as easy as possible, the flow to go, and that's a really, really difficult problem to solve when we really have to perhaps educate people in a very different way.
So because we initiate payments, we're enabled to initiate a bank-to-bank transfer where we can do a domestic a one-off payment, a scheduled payment, a standing order, or a foreign exchange payment. But those are all payments that are done within a bank account. So all we do is initiate them. We don't execute the payments. The payments are being executed by the bank. And so from a KYC AML perspective, actually we don't have to KYC AML our own customers because they've already been KYC'd in AML in the bank which we are connecting to. And therefore, they are an account holder there. And all we're doing is asking for permission to initiate a payment on their behalf. And, obviously they need to approve that. So it sort of toes the line between, whether you're opening an account and the identity around that account versus the actions that you can take within that account. And, we're a big believer that actually, what we're doing is building innovation on top of the banking infrastructure and doing things that the banks could potentially do, but generally aren't doing.
Moving forwards, it's a composition of awareness and education that perhaps, yes, opening accounts and going through an authentication process is necessary, although it embeds friction. One has to be aware of the positive effects that reduces fraud and what that means for you as a person or for the company. And I think there's more work to be done on that. And then, of course, is understanding also the end consumer. So we have been working on creating a personal financial management app the past year, and we found out that it's pretty hard to onboard customers who have different vulnerabilities, especially that are not that tech savvy or maybe has some disability. And these people, although the tech is great and there are still things that have to be added on, there are more things that have to be included, like thinking about how the journey and the account can be open to facilitate for those people who have, for example, some type of disability or who are visually impaired or have some hearing impairment, and the structure of the code to embed voice to text and all of that. So I think it's taking a step back and seeing actually these type of services and technology and to reduce fraud.
I think in countries where you do see increased collaboration, to your point around like Singapore or the Nordics, or even Canada, I know Verified Me is coming out and trying to bring the telcos, the banks, and the governments together. You're seeing just increased level of, I think there's an acknowledgement that competition should be around the product level and not necessarily around the identification level. Like, let's try to get access for everyone to these services, and then we can compete above and beyond that. And I think you're seeing much more successful authentication sessions, as well as like more robust and comprehensive identity practices. In areas such as the US, where we're having more competition and still not entirely sure we're figuring out, we have no national identity scheme, if you will, and private sectors are still trying to do their own thing and compete against one another. I think fraudsters see that an opportunity to capitalize on this disunity and try to take the same problem or the same vector and apply it across different industries, and including the government. So I do believe collaboration is key to this.
We launch a card now, which is called a motion code card, okay? And I don't know if you have heard about it, but at the end, it's a debit card, a regular card. But it really helped us to drop down all the card non-present frauds related payments. Because at the end, this is a card which there is no PAN number. And on the backside of the card, the CVV numbers, okay, they changes every 5 minutes. So there is a small LED and it changes. So as you can imagine, you can intercept the CVV of that payment, but 5 minutes later, the CVV is not available anymore, right? So it's what we call a dynamic CVV. It's sometimes also to remember that at the end, we have a user at the end that is making a purchase, a payment. So how we will help him to understand that what he is going to do is completely safe. It is as safe as paying with, €1 or with cash.
We have what's called SAFO status, Specified Anti-Fraud Organisation status in the UK, which allows us in legislation to share data between public and private sector. So I think it's very important. I think what we've started to see in the last year is actually it was more of a one-way relationship in the past. It was private sector information going into public. We're starting to see signs of there's more confidence for public sector to be putting into that pool and pot as well. So we've had organisations like the DVLA, our driving licence agency, come into membership now who screen application status and also file, which obviously coincides a lot with those documents that are used for verification. So
yeah, I think another way to think about it is, the speed at which a government or an entity of that size would move with respect to a problem like this. And it's like they don't see it as necessarily immediate, where people that are in the space that are suffering these losses that have an impacted business will want to act, yesterday, not create a framework for 5 years down the road or a year down the road. But I think for me, kind of when I'm thinking about this, is it has to be in the hands of people that can act and can solve these problems within a framework that's reasonable. So again, we go back to that concept of collaboration, because it is the role of the government to put in place a framework, and then innovation comes within that box.
I think it's inherent on us to build privacy and security into our entire process, into our product and our platform. And so, we are ISO 27001 certified. We're going to be SOC 2 certified very soon. And that means just having the governance around what we're doing, using in understanding the attack vectors from everywhere, from on the device. So having really strong device management through to the data. I mean, we're a data powered business. So, how we encrypt data in flight or at rest in our databases, through to, secure socket layers of when the data is in movement, and in turn, how then that business is able to, or individual is able to give us access to their bank account to execute a payment. And all of those things, I think if you think about all those different attack vectors and really try and sort of reduce the risk in each one of those vectors, in each one of those stages of the full product lifecycle and user lifecycle, then I think you can at least be on the good foot and try to stay ahead of the fraudsters as much as possible.
Sometimes where things like biometrics, obviously appear great, but ultimately maybe aren't. Whereas some of the other kind of hidden behavioral analysis, things like, I don't know if anyone knows the call sign product, which again in the more mobile space, looks at the way you're holding it and your movement and uses the sensors in a cleverer way to create a kind of fingerprint pattern. So I think there's a real opportunity for in-life management of customers around cyclical checks, but also around dramatic spikes in behavioral change. And I think that's one kind of revolution where the data, to Mark's point, the data kind of moving in and out and being shared, and the profiling of what a normal customer looks like to your business can really be quite a powerful tool. And we're certainly not there yet. I mean, there's a long way to go in most organizations' use of that type of intelligence. But I think it's certainly coming. The capability is increasing all the time. And so yeah, I was thinking more about in use and in life customer management, and those kind of trend checks and behavioral checks that more customers and more kind of industries, frankly, should probably look to manage.
So the advertising industry, which I had the pleasure of working in to some degree over the last 20 years, has really used data very well and in a very clever way. When you talk about motivation, they're very motivated to drive up revenue by using as much data as they can. And so let's be very clear, Google and Apple and the developers on their platforms know everything about you and your phone. By default, you have to opt out of the advertising ID that is on your phone, which basically tracks every single piece of usage, every app you use, where you've been, everything on your phone. So I think it's really interesting if you use that in the financial services context around fraud. I think there are some interesting things you can do because you basically know the behavior of the individual at the other end of the phone. And so we're trying to pull from these different industries and applying it to the likes of financial services, I think is a really, really good idea. And I think I further what John's saying, that is critical for understanding fraud.
And authentication more generally is becoming, I think, more difficult even in the pandemic. Of if we think about not only are people moving to devices, but a lot of the behavior analysis that we have done, or a lot of the machine learning techniques that people have deployed, were done on behaviors pre-COVID, right? They were done on behaviors that were really established before the pandemic blew up, which is completely made it divergent, but introduced more volumes. So with more noise, it's easier for fraudsters to try to get through the noise, but also has to introduce new behavior patterns to these machine learning algorithms that have like grown up, if you will, and matured pre it. So I know a lot of companies are trying to come to terms with that and trying to put implementation measures in or stopgaps to try to help mitigate it around. But I think it's really interesting time to see what disruption and what like behavioral patterns can do to these systems. And even though we might think that we are in one point comfortable, they're only as comfortable as we are normative. So it's kind of interesting to see how they adapt.